Hey, buddy. Good. Good morning, everyone. When I was putting my presentation together, I said, ooh, it's President's Day. I have a quote from the 42nd President of the United States, Bill Clinton, and he said something so profound. He said, follow the trend lines, not the headlines. You heard just before I got up on it, you heard similar stories. But this is a guy that said it years ago. Think about it. If the market goes up and the news is bad, that's good. If the market goes down, the market goes down and the news is bad. If the news is good and the market goes down, that's terrible. Because the market looks ahead, as you heard before. Yes. Most recently, I think it was January 27th this year, a horrible thing hit the headlines. They called it the new Sputnik crisis. When China came out with the new AI chip, let me get my statistics together, the market cracked because they called it deep seek. And they said, this is the new and the best computer chip ever made. And the stock market went crazy. Let me get my numbers here. The S&P dropped 117 points. The composite fell 213 points. But you know what? At the end of the day, the Dow Jones was up 285 points. And we that look at the stock market, all of us, should look at the breadth of the market. That means how many stocks go up and down, go down at the end of the day. And you know what? With that horrible headlines, most stocks ended higher that day. Because the technology stocks were under pressure. They figure, uh-oh, the Chinese are going to take over the AI territory. It didn't happen. And you know what? Talk about tariffs. I mean, every day I turn on the television, I start to shake. I said, gee, I don't know what it's going to do to the stock market. And then it jitters, the market jitters. You know, I think Canada and Mexico, 25% tariffs. I think that's what I heard last. And China, another 10%. And, you know, you got to make the cars here. And, you know, I don't disagree with a lot of that stuff personally. But, you know, the stock market, given all of this that we hear today, is within a couple of percentage points of making all-time new highs right now, as we sit. So I don't say it totally discounts the negative news, but watch the market because it anticipates events. And most recently, and it happened a few days ago, I think it was February 7th, a week ago, the CPI came out, Consumer Price Index came out. Oh my gosh, inflation. I got to give you these numbers. The S&P fell 82 points that day. The Dow dropped 578 points that day. And the NASDAQ Composite fell 373 points that day. But by the end of the day, even with all of that tragedy, we're still close to making all-time new highs. There was no major damage. The headlines scare us. Remember, the market is a leading economic indicator. And it moves up in anticipation of good news and moves down in anticipation of bad news. And so far, ladies and gentlemen, we've been doing pretty well the last couple of years. You know, the bull market, this market that we're in, this rising market, started in October 2022 at the bottom. This bull market that we're in is 2 years and 4 months old. And I'm going to show you some slides. Let me take a look at what we have here. Again, presidential cycles. I wanted to share this with you. I don't know if we can see it as clearly as I'd like to. But let me go over here and I'll show you. The first year of a president's term in office. That was the theme of my presentation today, talking about how the market does in the 4 years. Who cares if it's a Democrat or Republican? This is not a political commentary. But here, the first year, the average gain is a little over 6%. Okay? The second year is probably the weakest of all 4 years, historically. This data goes back to the 1920s. The third year is usually the best year of all 4 years for the president. And the fourth year, the market goes up again. Ladies and gentlemen, we're in the first year of the bull market, of the president's cycle. I want to show you a slide of all the years, the first year of a president's term in office. On balance, this is what it looks like. It starts off a little jittery early in the year, and then come around late March, early April, you get a nice rise, and it pulls back and flattens out. I'm not saying that's exactly what will happen this year, but I'm kind of leaning this way. Again, with the headlines that I talked about, scary. Follow the trend line. Okay. I did some homework. Let me go upstairs, up here, and look at what I did for the second year of a president's term in office. I just showed you that it's the least attractive. Watch this. Next year, 2026, is going to be the second year of president's term of office. If you go back 4 years ago, from 2026 to 2022, the Dow lost 24% that year. This is the second year of the president's term in office. Biden was in office at that time. You go back 4 years past that, 2018, Trump was president. The Dow dropped 19% that year. If you go back 4 years, this is the second year of the president's term in office. You go back to Obama's year, that was 2014. The market actually went up that year and gained about 15% by the end of the year. Go back another 4 years, 2010. Obama was in office early in that year. Dow was down 13%. And it ended up 17%. Go 4 years behind that. Again, you go Bush, George W. Bush. The market was very erratic and ended up 11%. This is his second year. If I go back another 4 years, 2002, Bush was in office. The Dow lost 21% that year. And if you go back another 4 years, back to 1998, Clinton was in office and the Dow dropped 15% that year. So next year, I think we could have some kind of a pause. But as I just mentioned to you, this current bull market is 2 years and 4 months old. We're in the first year, and I just showed you a picture. I think that we're going to go flat to up. In fact, my target for the S&P 500, it's about another 15%, about 7,000 by the end of the year. Huh. Let me look at some more numbers. You know what the Dow is up so far in this bull market? That started in the low in October of 2022, 2 years and 4 months ago. The S&P, the Dow is up 51%. The S&P is up 70% in the last 2 years, 4 months. And catch this one. The NASDAQ composite is up 94%. So I can't say we're early in the bull market, but this is the first year of the new president's term in office, and I don't think the bull market ends. And now I'm going to give you my quote. I think I'm credited for this quote. Rotation is the lifeline of every bull market. I'll repeat, rotation. And you heard just before I get up on the stage, you heard that we're talking about this rotation going on. I totally agree with everything you just heard. In fact, let me show you some slides. Here's the breadth of the market. You could see how well it did. There's the trend. We had a bit of a correction starting late last year, and now you're starting to see this is the broadening out of the market. In other words, in the last couple of weeks, more stocks are starting to participate. That's the rotation I'm talking about. Here's the NASDAQ composite. Please note that the NASDAQ has been flat. Look at the move it's had. Here's the October 2022 low. There's your 94%. But in the last several months, the NASDAQ has been flat. In fact, it's performing a little less than the S&P 500. It's been underperforming for the last 4 or 5 months. That's not a catastrophe. Just think of the Magnificent Seven. You know, you have NVIDIA and Tesla and all these, Google and all these, they're tired now. So they slowed down. But what's replacing them? That's the story I'm talking about. Let me show you. Sectors. Let's look at the sectors that are participating. Ooh, look at this one. That just made a new high. Communications. I'll repeat. The NASDAQ's slowing down because it's had a huge run. And this thing is making an all-time new high. And look at it, it's outperforming the S&P 500. Hello? I think that's the new leadership. Here, consumer discretionary, starting to pull back and starting to underperform the S&P. It's had a nice run late last year, and it's slowing down. Here we have consumer staples. It had a bad last couple of months at the end of last year going into, but look at the last couple of weeks, the last 2 months, you're starting to see the consumer staples rotating. This is what I want to see. This is what you heard before. This is what we're talking about. You want new leadership? You got to look for the rotation. Follow the trend lines. Energy. How do I go back? Red arrow? Oh, okay. Thank you. I did it again. Here, you have energy. Look at what it did late last year. Now it's starting to recover a little bit. It's still underperforming. Look how many years energy has underperformed the S&P 500. But look at, you're starting to see a little bit of stabilization in the energy area. So you can find some stocks in there that you think could do well with this new rotation, and you're talking about political invitations. You got to say, look at the financials. Look at this, folks. They're making all-time new highs. Go look at J.P. Morgan, Citicorp. I mean, and NVIDIA, which is fine, but it's flat. And these are up. Follow the trend lines, not the headlines. Look at this. Again. Look at it, outperforming the S&P 500, financials. Healthcare. Look at healthcare since June of last year. Terrible decline. Look at it now. Broke that downward bias. Healthcare. Johnson & Johnson. Take a look at it. Abbott Labs. Take a look at it. They're starting to improve. Okay, excuse me. This is the industrials. They had a little bit of weakness late last year, but look at now. They're starting to recover, but they're underperforming. But the rotation, keep an eye on it, because if these start to make new highs, which I suspect that they will, you're going to have this new leadership. XLK, technology. This is all the big tech stocks that we talked about. Look at what they've done in the last couple of months. They've been flat. That's the choppiness because the big moves, the big percentage gains were in those stocks. Now I'm starting to see, again, follow the trend lines. Materials. I'm sorry. Materials down late last year, but look at it, starting to recover a little bit. Just a little bit, starting to outperform a little bit in the S&P 500. Materials. That's an area to look at. Real estate. Real estate was down. Now it's starting to come back a little bit. It's going to take a little bit more time, but again, it's holding above the lows, and that's very, very important. Utilities. Look at this. Utilities, look at they had a very good run coming out of the October 2022 lows. And they lost some momentum and price action late last year, but this year it looks like it's starting to recover. Xcel Energy, take a look at that stock. And that's what I have for the sectors. And as you can see this little graph here, it has the lines going all over the place. If lines make you confused, please come to our class today at 4:15. And this fellow here, Jay Woods, and I are going to share 2 hours with you to help you identify the best of the trends. Thank you very much. Is that all? Oh, yeah.
Again, we do have one microphone there, and we have one of our staffers wandering here. If you just raise your hand, she can get a microphone over to you if you have a question or two for Ralph. While you're thinking about it, Ralph, I guess I'm going to ask a question. Of all the sectors that you showed there, if you had to pick one, maybe two.
Financials.
Financials?
Yeah.
Right off the top?
Yeah. Financial, healthcare.
Healthcare?
Yeah.
Healthcare is an interesting one to me because you think about what the headlines or some of your thoughts about what would happen, but that's actually showing strength.
Yeah, they're coming back. They're starting to make strides. Yeah.
Okay. All right. Let's see. Do we have anybody? I think.
Well, this confirms what you were saying.
It's nice to see. I mean, you have to.
Yeah. You stole my speech, you know.
Uh-oh. Man, now I'm in trouble. I don't want to get on Ralph's bad side.
No.
Do we have somebody going to that microphone? I can't tell if he might just be standing up for a minute. Oh, right here in the front. Yes, sir.
So thank you for the awesome presentation, but my question is that as per the trend, what makes the market go upwards in the third year of the presidency?
What makes the market go upward in what? I'm sorry?
The third year of the presidency.
What makes the market go up in the third year of a president's administration?
That's a great question. What makes the market go up the third year of president's term in office? I don't have any specific items, but think about it for a second. The first year, well, I didn't vote for the guy, but let's see what he does, okay? And noticing what the current administration is doing so fast, which is okay, but at some point, people are going to get tired of it. You know, maybe the administration gets a little ahead of itself. So I think there will be a cooling off period, even for Trump, you know? So it's what the president's going to do in the first year, and people are maybe questioning it in the second year. And the third year, they're recovering and saying, well, maybe the guy's right after all. So I suspect it's like that.
Okay. We have one more question here at this microphone.
Hi, thank you for the presentation. I was curious to know if you track any intermarket relations and or correlations in the market.
Oh, yes. Intermarket, that means do I follow commodities, fixed income, and stuff like that. Well, that one chart that we had with materials, you're starting to see DuPont looking better, and I look at the commodity, but of course I look at the stocks, and you're starting to see some of them recovering very, very nicely. So, yes, I do look at intermarket analysis, and that's what's so great about technical analysis. A chart is a chart is a chart. If it's going up, it could, but by the way, what pushes charts? Stock prices. It's called supply and demand, buyers versus sellers. You have buyers and sellers in stocks, commodities, currency, fixed income, foreign markets. So theoretically, I have an opinion on anything that moves.
Perfect. Do we have anything else?
Follow the trend lines, folks.
Excellent. Well,
Okay.
thank you so much, Ralph. Again, as Ralph mentioned, he does have that Money Masters course.
That was all right.
And if you're not already signed up for that or any of the other courses that we have, just see someone at the desk. They'll get you taken care of. That's at 4:15 with Ralph and Jay.
Thank you.
Thank you.